qualify as a black swan event, or would it have to be sustained, this market sell-off and treasury buying?
I think it would have to be sustained more. What is unique about the kinds of risks we are seeing now, Vonnie, whether it's political risks and the bombshell you mentioned, whether it's climate change, which is a big topic at Davos, whether it's the coronavirus, is they're very non-linear and therefore very hard for investors to figure out how they'll work. And I think this will be very different from 2003 and the SARS virus, which is where everyone's running back to think about what will happen here. That cost about $40–50 billion. It took 2 percentage points off China's GDP. But I think the world is very different. It's much more globalized. There's much more international travel. Supply chains are much more integrated into China. The credit cycle is at a much later stage. How this plays out, I think, could be quite different from SARS. And I think it's still in very early stages.
In some senses, though, that gives room for there to be a lot more of a reaction, right, if this does continue and there isn't a vaccine found. You just mentioned how much bigger China's economy is, $14 trillion, and how supply chains are more integrated. Would that not prove more difficult then to overcome?
I think whether it plays out anything like that or whether they can dampen it down now is still a very open question. I think a lot of what we've seen, Vonnie, is a flight to safety, more kind of retail and intermediary money or shorter-term money that wants to take risk off the table. I think the longer-term, more sophisticated investors we work with are sort of still seeing where this plays long-term. If you look back in the past, there have often been big upswings after such events. So I think one of the key messages we'd have is don't overreact, but really try and understand the non-linearities of this specific pandemic.
Are there any lessons to be learned beyond what you just said about this sell-off, though? Are investors potentially just looking for a reason to lock in gains because, my gosh, the cycle has been going on so long that there must be something coming?
I think we had this very unique mix of two factors. There's sort of this secular late demographic cycle where you have aging populations, and investors haven't quite figured out that long-term growth in an aging population in most developed worlds is going to be sub 2% for the US and Europe. And you've got this late credit cycle where there are gluts developing in certain parts of the inexperienced part of the private credit market, parts of real estate. So there's lower, slower growth combined with uncertainty about how to play the late part of the credit cycle. And then when you combine that with the amount of political risk, whether it's the UK or China and the US, investors are quite skittish and should be and are quite prepared for lots of vulnerabilities that can throw things off. But that's just where we are in the cycle, I think.